Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our head of research, Jasper Lawler, to discuss this week's slide in stock markets, what he thinks about that, the worst month for Bitcoin since 2015, what Theresa May's troubled leadership and the Bank of England mean for the pound, and oil reaching $70 a barrel. But first I'll run through some key earnings and some economic data for the coming week. So starting with corporate results, we have earnings from Ryanair on Monday, HBOS, Ocado, BP, GM, Walt Disney, Gilead Sciences and Snap on Tuesday. Rio Tinto, GlaxoSmithKline, Tesla, Yelp and 21st Century Fox all on Wednesday. Total, Societe Generale, Thomas Cook, Smith & Nephew and Twitter reporting on Thursday. Then PG&E on Friday. Moving on to the economic calendar next. On Monday we have service sector PMIs from China, Europe, the UK and the US. On Tuesday, the RBA rate decision. On Wednesday, German industrial production, then the RBNZ rate decision. On Thursday, it's China trade data as well as the big one for the week, the Bank of England rate decision. And finally, on Friday, it's China inflation, UK industrial production and unemployment in Canada. So Jasper, a bit of volatility reappearing in stock markets.
That's right, Kelly. So the Dow fell over 500 points in 2 days. That's definitely more than we're used to recently. We saw a spike in the VIX. It hit its highest since August. So all that to me makes sense. It's only a couple of days worth of data. It was a bit of a shock. Obviously it spurred talk of, is this the top in the market? But why is there that talk at the top of the market? It was because we're up 15 months in a row in the S&P 500. The S&P gained over 5% in January. So we've had a really strong run and we had a particularly strong January. So there was a couple of things going on. Janet Yellen's final testimony, Trump's State of the Union speech. And so I think there was just enough there, perhaps right at the end of January, right at the end of the month, for a bit of profit taking, end of month profit taking. I don't think it's anything more than that at this stage. And we'll have to see how earnings season perhaps progresses to really get a good feeling as to whether there's more potential for a correction here.
And I mentioned earlier more earnings coming this week. Any in particular you'd be looking out for?
Well, we're concentrating on the tech stocks again. So we've got Tesla, Twitter and Snap all coming up next week in terms of US earnings. There's a few UK sales results above and beyond what you've mentioned in terms of earnings. So I know Tate & Lyle, for example, Bellway, TalkTalk, DFS, a few examples that actually you can watch out for in terms of just sales updates from the UK.
Okay, great. And it's obviously been a walk in the park for stocks, but what about Bitcoin?
Yes, I mean, different story for Bitcoin in January. It's worst performance since 2015. It's down a half, it's reached almost 20k, and the thought was that maybe, not my thought, but a sort of consensus thought maybe was that 10k, that 50% pullback, might generate some demand to send the market higher again, but it's not so far, and so we're really struggling to hold that 10k level. To me, it implies that actually we've got further to go on the downside. And what's interesting is that while Bitcoin's having a hard time, some of the other big ones as well, Ethereum, not doing too well either. But actually, some of those smaller coins seem to be soaking up some of the demand. So it's almost like the crypto space has developed a little bit beyond just Bitcoin. People are now doing their research as to what else is available, what could be the next Bitcoin. So those are, I think there's some competing demand from within the coin space, if you like. Okay,
let's just switch gears for a moment. It's the Bank of England decision this week, but the pound doing well despite Prime Minister's facing difficulties.
Yeah, I mean, it's been a continuing theme. The pound's done well over the last few months, and Theresa May, there's always this kind of whiff of of her leaving, hanging around, and it seems like it's hard for her to get rid of. But nonetheless, I mean, the pound's just not focusing on the geopolitics. It's focusing on the fact that the Bank of England is most likely going to follow in the footsteps of the Fed at some point and begin its gradual rate hike cycle. And at the moment, just the consensus, the sort of default expectation, if you like, of Brexit is that it's going to be a bumpy road, but it will work out in the end. So until we get some major sign that's not going to be the case, I just can't see what's going to disrupt the pound. That said, we've hit the 140 level. We're sort of stalling a little bit around there, so maybe maybe some profit taking comes in.
Okay. And lastly, oil at $70. Would you say this is just profit taking?
Well, we're talking a lot about profit taking right now, right? Bit of a continuing theme, but actually it makes sense. I mean, we've had a kind of cross-asset surge in risk sentiment. And so high beta currencies like the pound, oil, stocks, they've all been going up in unison. It's been like a general risk-on environment. And so if we are doing a little shift over to risk-off, then actually it makes sense for these markets to pull out together. And I think it is, as you said, that 70 level and the fact that it's the end of the month and oil's just done well like other risky parts of the market have.
Okay, great. Thanks, Jasper. That's all. And thank you all for watching. If you wish to get these videos as they're released, please follow LCG on social media.